The S&P 500 finally is in a correction. It has dropped slightly over 10%. Pretty glum. Investors are pretty miserable, but there will always be down markets. Let's talk about strategies for a down market. A couple of things you could do. Number one is you could do what's called a Roth conversion. And that means when you take an IRA and you convert that to a Roth IRA. Once it's converted to a Roth IRA, providing you leave the money in for at least 5 years, when you do start taking the money out after you're 59 and a half, the money comes out tax-free. So it's a pretty big tax saving. If you do this when the stock market's down, so if your IRA goes from $200,000 to $100,000, or you convert it to a Roth IRA, it's a taxable distribution of $100,000, but now it goes into an account at $100,000 that could potentially be worth $200,000 one day or a lot more. You don't have to pay any taxes on that money at all. And if you don't want to pay the full taxes on $100,000, well, maybe convert 20 or 10% of your IRA to a Roth IRA. You don't have to do the whole thing. The other thing you could do is what I like to call upgrade on the downgrade. Let's say you have a food stock that's down a lot. It's an okay company, but it's down. Maybe sell that and put that into a better food company. What I'm saying is get rid of stocks that are second or third string stocks in a sector that are down and upgrade and go into a better one in the sector. Typically, the best ones in the sector go down the least and recover the fastest when the market does come back. And plus, you'll have those losses to harvest, and those losses will give you tax-free capital gains until you use up all the losses. And if you don't use them up in 1 year, you can carry them over indefinitely into future years. So that's a really big benefit that you can have. I think those are two very worthy things you could do.